In the last lecture, we discussed about the pre-shipment documentation, which is really important and crucial for the exporter to understand, to be well informed of, in order to go ahead with a smooth flow of export consignment. In this lecture, we will discuss post-shipment documentation. Actually, in detail, we would be looking at what post-shipment means and what are the various documentation, what are the various steps and stages involved and required for this stage to be effective. So, the various steps involved in post-shipment documentation are the submission of documents by the clearing and forwarding agent to exporter, export declaration, shipment advice to importer, presentation of documents to bank for negotiation, dispatch of documents. In this stage, the bank, the negotiating bank, dispatches all the list of the documents as a file to the importing country or the importer bank. Acceptance of bill of exchange, letter of indemnity, realization of export proceeds, processing of GR form, realization of export incentives. So these are the various stages that we will be looking ahead to understand post-shipment documentation. So let us first introduce what post-shipment documentation actually refers to. So in the last lecture, we had delivered the goods or handed over the goods to the shipment company through the clearing and forwarding agent. So the post-shipment procedure will start as soon as the goods are loaded on board the ship. So the exporter has chosen the particular vessel through the shipping company, and once the entire export consignment is loaded onto the vessel or the ship, we say that the post-shipment procedure or post-shipment stage has begun. The post-shipment stage mainly consists of procedure for realization of export proceeds and incentives. Export proceeds means the payment for the goods or the exported goods. Incentives are all the various schemes or benefits that an exporter can claim from the government according to the policy. Thus, we can also call this procedure as export realization and incentives procedure. This particular stage and procedure has two goals. The first, to get paid according to the agreement or as specified in the letters of credit. The second stage is claim the incentives or refunds that an exporter is eligible for according to the policy and schemes of the government, and close any compliance issues. The first step in post-shipment documentation is submission of a list of documents by the clearing and forwarding agent to the exporter. What are these documents that the clearing and forwarding agent must submit to the shipping company? The first is a copy of invoice duly attested by the customs. Drawback copy of the shipping bill which is provided by the shipping company. Export promotion copy of the shipping bill. A full set of negotiable or non-negotiable copies of bill of lading. Original letter of credit, export order or contract, or any other document that a particular importer or importing country demands according to their policies and schemes. The next step is export declaration. In this step, the exporter needs to declare through an export general manifest within 24 hours of the shipment of the vessel, or in case of an aircraft carrying the consignment, before 24 hours the aircraft leaves. What does it help with? The export declaration on behalf of the customer, on behalf of the exporter, helps the custom authorities to manage and control the export process, ensure compliance with customs officials' export regulations, and it serves as a crucial step in monitoring and getting accurate export statistics and data for trade purpose. So it is at this stage that all the customs officials maintain trade statistics, how many shipments are boarded and they are destined to which country, and thus this step is a crucial step in post-shipment procedure. The next step involves shipment advice to importer. After the goods are already shipped, they have boarded the vessel and the vessel has started from the port. The exporter intimates the importer about a number of issues. These number of things that are intimated to the importer are the date of shipment. What is the actual date when the vessel started or began the journey from the port of shipment? What is the name of the vessel or the container? So there are a host of companies which provide containers for shipping purposes on the port. Which company and which container have been used for the shipment of the consignment? The name of destination, which country and which location the export consignment is destined to. And what is the tentative date on which the vessel would be arriving on the port of destination. The exporter also needs to send one copy of bill of lading to the importer. Following this step, the documents are then presented to the bank for negotiation. These documents are also called negotiable set of documents. In all, there are 10 documents that are needed to be submitted to the bank for negotiation purposes. The first document is bill of exchange. Second document is bill of lading or airway bill. So in the case of an aircraft carrier, an airway bill need to be furnished. Third document is the original letter of credit. Fourth document is customs invoice. Fifth document is commercial invoice, including one copy certified by customs. The sixth document is packing bill, packing list. Seventh document is foreign exchange declaration forms. Eighth is exchange control copy of the shipping bill. Ninth is the certificate of origin. And final document is marine insurance policy and a duplicate version of the marine insurance policy. All these set of negotiable documents are then dispatched. The bank negotiates these documents to the importer's bank, and this negotiation must happen according to the manner specified in the original letter of credit. Before negotiating these documents, the exporter's bank checks them to ensure that all formalities have been complied with and all documents are in order. Once the bank is fully satisfied with the accuracy of the documents, the bank sends the bank certificate and attested copies of commercial invoice to the exporter. So there are a number of bills of exchange, types of bills of exchange that can be issued, and these are called documentary bills of exchange. There are two types. The first is side draft, the other is usance draft. Side draft is issued immediately, while usance draft can be made for a future date. For example, it can help the importer to pay after 60 days or on a future date. It could be 30 days, it could be 60 days, it depends on the agreed timeline. The next step or the document is letter of indemnity. The exporter can get immediate payment from his bank on the submission of documents by signing a letter of indemnity. Letter of indemnity means that the importer has not yet made a payment for the export consignment, but the exporter's bank has already paid the whole amount to the exporter. If in case of any default by the importer, the exporter is liable to pay the huge amount to the bank because they have signed the letter of indemnity. So, in the event of non-receipt of payment from the importer, the exporter will have to pay the principal amount plus interest plus any other bank charges. So, this is the whole concept of letter of indemnity. The next step is final realization of export proceeds. Once the documentary bill of exchange is received, the importer will release the payment either in case of side draft or usance draft. The exporter bank receives payment from importer's bank and credits it to the exporter's account. This is the next step, which is processing of guaranteed remittance form. On the receipt of export proceeds, the exporter's bank submits the duplicate copy of GR form to the Reserve Bank of India, intimating it about the receipt of export proceeds. If the details are correct, the Reserve Bank of India treats the entire transaction as complete. If the details are inaccurate, then the whole process will repeat again, starting from the first step. Now let us look into what is the GR form. It is kind of a traditional RBI export declaration form. Nowadays, we don't have the GR form, but many books still use the term process the GR. Nowadays, we have the shipping bill plus EDPMS or EBRC. Together, they play the role of the guaranteed remittance form. Now, once the export proceeds have been released, it is really important for the exporter to avail any incentives that are liable to him or her. There are a number of export incentives that Government of India promises for the exporters. It could be in the form of cash refunds, it could happen in the form of duty credits, or also in the form of e-scripts. So, if it is in the form of cash refunds, money is paid back to the exporter directly into their bank account after shipment. Now, in order to avail any export incentives, the exporter must specify it in the shipping bill. So, the government reimburses any taxes. It could be central, state or government taxes, or also local duties that the exporter had paid on the purchase of any inputs that were used in the production of exported goods. These duties can be refunded and it can take the form of duty credits. So, in this form, a credit balance is made in the exporter's account and this balance they can use in the future transactions. E-scripts is a form of digital duty credit and it is specifically issued on IceGate or DGFT website in India. Before releasing these duty drawbacks, duty scripts, e-scripts, what should bank actually check? The banks check for documents title, wordings exactly as in LC. At this stage, there should not be any discrepancy. If any discrepancy is found at this stage, then the exporter ceases to receive any kind of remission of duties or taxes that they paid on the import of any products that were used in the production or manufacture of the exported goods. The bank also checks for consistency in names, addresses, quantities, specifically HS codes. There should not be any kind of inaccuracy in the mention of HS code, the prices and Incoterms. The third most important thing is the date of shipment. There should not be any mismatch, any wrong in the date of shipment, the issue and presentation or delivery period. So these are the three things that serve important purpose for the banks in order to release any kind of duty remission to the exporters or incentives to be secured by the exporter. Post-shipment export incentives in India are of various kinds. The first is duty drawback. Second is ROTTEP, which is remission of duties and taxes on exported products. The third is ROS-CTL. It is specifically meant for apparel products. And the final is EPCG, which is export promotion of capital goods. So specifically, EPCG is meant for import of capital goods at zero or concessional rates, but it carries with itself an export obligation, a condition to use it for exports as a multiple of the duties that was remitted. So, under ROTTEP, there are a number of incentives for the exporter to avail. This ROTTEP scheme was launched on January 1, 2021. Earlier, it was named as Merchandise Exports from India scheme. But because Merchandise Exports from India scheme was deemed not compliant with the WTO policies, it ceased to exist and it was replaced with ROTTEP scheme in 2021. The ROTTEP scheme is wholly WTO compliant and it cannot be leveled in the WTO dispute panel for any undue service to the particular sectors. It does not violate WTO procedures. It does not violate WTO's Agreement on Subsidies and Countervailing Measures Agreement. It is a very competitive strategy by the Indian government to level playing field for Indian exporters. So, Indian exporters cannot be at competitive disadvantage at the world platform. It levels up the playing field at the international platform. It neutralizes tax burden on exports and make them more competitive at the global stage. So, here we can see that the goal of post-shipment documentation is simple: get paid on time and unlock export incentives. The exporter must ensure right documents, right sequence and right dates, and it is really important to fix issues early. For example, the name or HS commodity code should be exactly as specified and there should not be any default or any incorrectness in the consignee name.